Ladies and gentlemen, it's a hot one out there, right? Just mowing the lawn, and it's a steamer. But we got earnings to talk about today, okay? AT&T reported earnings pre-market today. We're gonna see what that looks like. Obviously, the reaction initially was pretty positive. You see, a decent upward movement, right at stock open as well as pre-market. Since then, has really leveled out to be, well, if you look at that, according to this, dead even on the day. Dead nut even. So we'll see what that looks like, but people were happy for a second there. Let's take a peek at what we got. True. Non-GAAP EPS here of 89 cents is a beat by 9 cents. Not bad, but from a GAAP standpoint, pretty disappointing. GAAP EPS of 21 cents misses the mark by 43 cents. So definitely a big EPS miss there in my perspective. I mostly focus on the GAAP perspective because that's actual profitability to me, and that's what I care about. So I'm curious what that looks like in terms of a net income line, and I'm sure they have a reasoning for it, so we'll take a look at that. Revenue came in at $44 billion, which is up 7.4% year over year. Is a beat by $1.27 billion is quite incredible for this company. You typically don't see a beat like that from AT&T. You really don't. I'm just being blatantly honest with you. This is a company that typically barely meets expectations to begin with. If you look at track record of earnings, it's typically not that beneficial for them. But this is pretty good. I can't lie to you. I like it. Adjusted EBITDA came in at $13.59 billion versus a $13.74 consensus, and free cash flow $7 billion versus $6.15 billion. So higher free cash flow is good to see too. Good for that balance sheet, I presume. From the mobility segment, there were 789,000 postpaid phone ads, 1.156 million postpaid net ads. Okay, 174,000 prepaid phone net ads. So obviously, postpaid means you're financing deals as opposed to paying outright. I personally pay outright myself because I think it's better for you. Postpaid phone churn of 0.69%. From I believe these words from the CEO here. We are raising our global HBO Max year-end forecast to 70 million to 73 million subscribers. Also, we're updating the full-year guidance for consolidated revenue, wireless services revenue, and adjusted EPS and free cash flow. So basically, they're saying their outlook is looking bright, right? They're telling you right now they're expecting better numbers than what were expected before, which is actually quite intense. Pretty nice to see that. For 2021, they expect consolidated revenue growth of 2 to 3%, which is not bad for them. I will be honest. Prior guidance was only a 1% growth, so not bad. Just the EPS to grow to low to mid single digits. Prior was flat, so growth there. CapEx in the $17 billion range, and free cash flow in the $27 billion range versus $26 billion previously. So again, free cash flow. It's been something this company's pretty good at. That's why they're able to pay such a consistent and decently high dividend as well. So, but it's good to see a guidance bump. So I see why the stock was up for sure. Oh, hey, Crocs. They're reporting earnings tonight. Or did they do it this morning? I can't remember. But hey, it's Crocs. I think they did it this morning. There's an ad for them there. Carbon net zero. Net zero carbon emissions by 2030? You think so for those pieces of plastic? I will be honest here. I'm not going to lie to you. I just got a pair of Crocs for my birthday. And they're pretty nice. I've been saying some bad things about Crocs, and I would never wear them out. But as far as a utility shoe, I'm not upset with it. It's better than wearing like a slipper or something, that's for sure. A lot more expensive, but AT&T shares are higher in pre-market trading. Revenue up, we saw that. Adjusted earnings, we saw that. Warner Media sales grew 31% as HBO Max introduced an ad-supported version of the streaming service. AT&T is spinning off Warner Media into an independent company that will merge with Discovery. Obviously, as you mentioned that, which is somewhat disappointing, obviously, because Warner or HBO Max is pretty huge for them, but that's okay. HBO and HBO Max have combined 2.8 new subscribers during the second quarter, bringing the U.S. And global totals to 47 and 67.5 million. Kind of would expect a little bit more in terms of net adds here, frankly. Especially they've been adding a lot of content, specifically those that are free new movies. You'd expect a little bit more in terms of net adds. They're expecting 70 to 73 million global subscribers by the end of the year, which isn't bad by any means at all. But I would expect a little bit more, frankly. Communications revenue rose by 6%, driven by strength in mobility and consumer wireless. Obviously, that's not too bad. Consumer wireline revenue up 30% with 246,000 AT&T fiber net adds. Fiber's the way, baby. That's where it's at. AT&T actually offers some pretty cheap service. Obviously, I'm sure you've witnessed their door-to-door salespeople, because that's what they do. But they actually provide pretty cheap service, and it's not bad at all. When you talk about download and upload, get that nonsense out of here. Quit flashing on my screen. Nonsense pop-ups. Yeah, so that's what I'm saying. Stanky, look, Stanky. I am after mowing the lawn. There's no doubt about that. But look, I'm just gonna go right to the press release. Okay, it's what I like doing. I love the press release. Makes me happy. Makes me very happy. So let's take a look at some of the good stuff. Cash from operations, $10.9 billion. Good to see that. We like seeing money. Capital expenditures came in at $4 billion. Not crazy amount of spend there. Nah, I'm not too upset about that. Dividend payout ratio, 55% again. It's a pretty high dividend. 55% is not a crazy high payout ratio. It's a little bit higher than you might expect for someone who expects to grow every year, but they don't grow by a significant margin necessarily every year. And, now with the dividend cut they've announced, it's going to be a lot lower payout ratio, which means they've got more room to grow, hopefully. But who knows what that looks like. We'll get to that bridge when we come to it, okay? We're not there yet. You got to be patient. Mobility, we saw these numbers. It's beautiful stuff. Revenue up 10.4%. Service revenue 5%. Equipment revenue 31.9% up. People buying phones, baby. Operating income of $6 billion in this segment, up 3.4% year over year. Good to see that. Operating margin came in at 31.7%. Same thing here with wireline. Penetration more than 36%, so still a lot of room to grow for sure in that aspect. You got a lot more customers you can add with AT&T Fiber. Got to consider that, and that's how this company moves forward now too. Warner Media, obviously separate company now, which is a bummer, but they're still part of this. Okay, they're still part of this. They really are. They've risen 12 million subscribers in the past year. Would like to see more than that, frankly. Really would. Average revenue per user at 11.9 domestically. Total revenue is up 30.7%, all due to subscriber growth, which is positive to see. You'd like to see that. Direct-to-consumer subscription revenue up nearly 40%. Yeah, nothing crazy there. Consolidated financial reports, you know what happens then. You know what happens when we do that? We go... If we're onto that, we saw the outlook already too, so nothing crazy. Oh no. So what else do we really have for AT&T here? Nothing crazy. I mean, AT&T, it's a great time. Look at this investor relations page. Hope you're happy. But oh yeah. I don't believe here they have included yet the 10Q for me, unfortunately, and I wish they did, but I don't believe they have. But that's okay. We can survive without a balance sheet. We saw the cash gain, $7 billion free cash flow. Hey, there's a thing about me. I'm always prepared. That's the thing. You never need to doubt what's going on here. Look at all these global notes. Yikes! All these notes. Nothing significant here. Yeah, I just really would prefer that 10K, but that's okay. That's what I got for you today, I believe. AT&T stock itself, obviously, in the last year, the performance hasn't been hot, down 7.63%. It was doing pretty decent, actually, until their announcement of this Warner Media spinoff, which has really skyrocketed in the wrong way, which some may say is excavating as opposed to skyrocketing, but the stock has been excavated down to down 13.5%. Look, I'm not saying the stock's incredibly cheap, nor is it a great buy at this rate. Obviously, it's your perspective on that. I think the fact that they've spun off Warner Media, which in my opinion was kind of the biggest segment for growth for them, which I don't think there's any denying that due to HBO Max, but it kind of disappoints me. There's no doubt about it. And the dividend cut is going to be affecting a lot of people. This company's had a consistent dividend raise for 20 plus years, and then they just end it like that. So this stock's not for you. It's not for you. I get that. Valuation's not incredibly expensive on it. It really isn't, all things considered. But just keep it in your mind, this company is going to be focused on wireless as well as the internet fiber segment as well. So if that's up to you, it's up to you. But valuation's not crazy on it. So really up to what you think there. That's all I got for you, and I hope you have a good one.